All the daily futures letters contain a trend time frame table that provide directional price targets across 4 distinct time horizons: the current trading day, the next 3 to 5 trading days, the next 2 to 3 weeks, and the next 2 to 3 months. These represent the time horizons I address in my analysis and those I underscore in the commentary. Why the variety of time horizons? To begin with, at any given time, any market can display a number of distinct directional trends over a cross-section of time horizons. For instance, a near-term bear trend will often coexist inside the structure of a longer-term bull trend. A good analogy would be seasonal weather patterns. Despite the fact that temperatures trend steadily downward from mid-August into mid-February, the Farmer's Almanac will remind you to anticipate short-term counter trends in mid-October, known as Indian summer, and another several months later, known as the January thaw. In technical speak, these would be considered short-term uptrends within the confines of a longer-term downtrend. I can show a recent example of this in the futures market as of this February 2015 recording, where 2 months prior the active wheat contract was in the grips of a decisive multi-week rally. The daily bar chart was largely void of reliable overhead resistance, yet the weekly continuation chart indicated longer-term trend-defining resistance at 665.25 the week of Monday, December 15. If we take a look at the hourly chart on that day, the only day, mind you, the market tested this long-term formation, you can see that other than a brief spike through in the very early morning electronic market, the day session itself opened below 665.25. In the first hour, it pushed briefly through by a full cent before commencing a 6-week bear cycle. No individual time frame exists in a bubble, with longer-term trend dynamics usually winning over the nearer-term ones. As illustrated a moment ago, a near-term bull trend will tend to exhaust itself so long as it exists within the confines of a well-defined longer-term bear trend. This is one of the reasons why, years ago, while on the floor of the Chicago Board of Trade, where my focus was entirely short-term, I always accounted for those price support and resistance levels directly correlated with longer-term trends. Not only are the long-term levels well suited for effective short-term trading, but they also represent the structures that dominate the overall market dynamic, which is especially useful for position traders and hedgers intending to harness multi-week moves. By including all time frames in your market analysis, one can more effectively predict directional reversals or accelerations in momentum, providing you access to the very essence of profitable trading and investing. Let's move on to the next video, defining buy and sell signals.